Okay, so we are on yet another session, with the January 2026 class. We're just going to be reviewing some of the things we did last class, with regards to trading with confluence. Trading with confluence in the sense that you are giving yourself more than one reason to enter a trade. I mean, you could have a strategy whereby all you need to see a moving average crossover and you jump in, but there are other strategies. Well, I suppose it's always better, some would argue, to have more than one reason for entering a trade. So if you don't have those two reasons, you don't enter a trade. If you don't have more than one reason, it means there is no confluence. So we looked at confluence last week, combining the mana setup, which is a three candle formation, with my pay packet setup. So we're going to look at GU just to do some back testing. I would use the 15 minutes on GU, because um, when I'm trading, I usually want to get enough pips. Doesn't have to be 100. It could just be something reasonable. At least I would usually prefer to have at least 30 pips from whatever asset, whether it's gold or GU or crypto. I want at least 30 pips. So um, the 15-minute time frame is and above is what will give me about 30 pips, you know, within reason. Now, with the confluence trading we looked at last week, like I did say, it's good for reversal when the price is reversing. I mean, it doesn't mean that it has to be at extreme ends. Like this one, for instance, you can see the price is currently here. It's not ready to reverse yet. The price before this low, before this swing low, that was the previous swing low. So what if we had said, let's go with looking for the mana setup here. Now the mana setup, like I said, the three candle formation with one candle being lower than the rest, like here, or perhaps higher than the rest. So that is the relative high candle, and this is the relative low candle, you know. So let's try and work with this. And the way we want to do it is we want the relative candle, which is candle number 2. The one before it is 1, 2, and 3. So we want candle number 3 to take out both number 1 and 2. Well, sometimes it's not going to be number 3 that takes them out. It could be number 4, 5, 6. So just put it this way. We want both candle number 1 and number 2 to be taken out eventually. So we would now say this is the low, and we will go to the high of candle number 1. Candle number 1 higher than number 2. So we see this. Let's make it bigger so that you can see it properly. Let's make it bigger. Okay, so that's the candle we're looking at. So we want both 1 and 2 to be taken out. This one opened, it went above, it traded above the high, but it did not close above. It came and closed here, so it didn't take it out. This one didn't take it out. This one didn't take it out. This one didn't take it out. The one that finally took it out was this one. Okay, so what we'll do is, because we're looking for a confluence of two setups, we have seen the mana setup play out. We now want to see the my pay packet play out. And here we see that the 8 has brought over the 20. Now I know you might say, oh well, the 200 is above, so it should be a sell. Well, yes, that's going with my pay packet strategy alone. But because we are combining it with mana, it's a reversal. We're trading the reversal. So we're going to ignore the fact that this is above here. So really, with this strategy, the 200 can either be at the top or at the bottom. So let's do this. So it's crossed over now. Do we jump in? Now the question is, do we jump in? We usually will want the color switch to happen. We would normally want the color switch to happen. Let's do this. So usually once the color switch happens, I mean, even though there's a doji as well, once the color switch happens, we enter. Now, unfortunately, if you entered this one, let's make it smaller again. If you entered this one, it would have been a loss. You would have entered, where is it? You would have entered here and immediately it came down. Okay. Now, you might ask, why did it come down? Why did it go against us? Now, number one, we cannot win every trade. That is a fact. We cannot win every trade. You know, something else you could use at confluence could be a higher time frame. So what am I saying? If you're looking to take a trade on the 15-minute time frame, take a higher time frame to see the direction of the trend on a higher time frame. People usually pair up the 15-minute time frame and the 4-hour time frame. But I mean, if it's MT5, really you can use, I'm sure you can use, H2 or H3. So if we had gone to the 4-hour time frame, we would have seen it's a strong downtrend. And you can decide, okay, fine, I don't want to go against the trend because the downtrend is strong. Now, having said that, let's go back to the 15. Now, having said that, there are going to be times when, you do this and it goes in your favor. But what I'm saying is, with this strategy, really, you can actually, you would not have been in error to have decided to enter this trade to try it. Because if you check it, you see that it's come a long way. It's come a long way down. So you are thinking it should be due for a reversal. One way to also note if it's a trade worth taking is to check where the 20 is. If it's far away from the 200, it's most likely going to reverse soon. So this happens to have been a losing trade. Okay, let's try another one. Like I did say, a higher time frame here revealed that it was a very strong trend. Consider others. Let's say, for instance, we saw this as a relative low. Okay, at some point, this was the relative low before it went up and came and formed lower. Because when the candles are coming down, you'll see that, you'll be thinking this might be the relative low. This one could be the relative low. How would you know it's the relative low? It's when it has taken out the candle before it. This one did not take out that one. This one did not take out this one because it didn't close above it. This one, it didn't take out this one, so on and so forth. It was now this one that took out, well, this one being relative low. The one before it was that. As a matter of fact, no candle took it out. It went lower. So even though they appeared to be the relative low, they were not actually the relative low. The price just basically, began to drop. So what we are doing today is basically just doing some quick back test of the strategy or the setup we learned last week, the confluence of both the mana setup and my pay packet setup. Okay, oh, sorry, this is where I was, I think. So if you say this one, was it taken out? Taken out? No, it was not taken out. Now, to be honest with you, when the candles are small like this, you don't want to be working with those ones. You don't want to be working with small candles. You want to work with big candles with big wick, at least within reason. So even if you see, let me do this. Even if you see, candles like this, smallish candles, prefer just leave it, move on, and go for candles with big wick, or at least candles that are big on their own as well. So the question is, if there's a strong trend on a higher time frame, like obviously we used a higher time frame, we use one time frame for give us a sense of direction, and we go to a lower time frame to find an entry. So this is the 15. So if we had checked, the 2-hour or the 3-hour or the 4-hour time frame and it's a strong bearish trend, guess what? Maybe we want to be taking a sell. Maybe you want to be taking a sell. Now, trading obviously takes time to perfect, takes time to master, because you might say, okay, fine, I'm going for a sell. What if I go for a sell and that is when it's just going to reverse going back up? Because if you take it this way, like I was saying a while ago, if you are going to use any of this as relative low to trade it up, here we see it just kept on failing. That's why I say, if you are going to do that at all, let it be that the 20 is far away from the 200. Let it be that it's far away. But then, if you want to trade it the other way, it's also fine. Why? If it's a downtrend, like we see here, the 200 is above and all that, a downtrend, it basically means it's a continuation. You are trading a continuation. That would be safe as well. Again, just make sure that you are not too far from the 200, because if you are close to the 200, you want to be trading it down if everything else is below the 200. Because like we said, the nearer the 200, the better. So price does a zigzag, like we know. It does a zigzag, impulse, correction, continue, impulse, correction, continuation, so on and so forth. So we're not surprised that price here, having crossed the 200, is pulling back, continuing, pulling back, continuing. So you can actually trade it in the opposite direction or go with the trend. The same way, you can decide to do exactly the same thing, whereby you are looking for a mana setup. That's the relative high candle, which is number 2. You want both candle number 1 and 2 to be taken out. In this case, candle number 1 is lower, so you put the one there, put that there. This one takes it out. You have found one piece of the confluence. The second piece is the mana, my pay packet play, which is the crossover. So we see this one came down, which is fine. It came down. We want it to pull back. If you decide to enter here, you had better have some price action knowledge that would allow you enter. Otherwise, wait for it to pull back. Because at the end of the day, a color switch is what we want. We want a green candle form taken out. So it pushed up, eventually it was taken out, not by this one, it didn't take it out. It traded below it, but it didn't take it out. Traded below it, but didn't take it out. This one eventually took it out. We could draw our SureFire zone, using the high and the point at which it took it out. The high, just in case it pulls back, we don't expect it to pull back that much, or even if it does, not to go much further. The point at which the takeout candles closed, it closed here. So you would then enter here. If it does pull back as well, you can enter again, and you can see it was profit. So you see here, we combine both the mana and my pay packet setup. But in this case, we are trading with the trend. We're going with the trend. But like I say, the mana setup, when we combine it here, is usually to create a reversal. So this is GU. Because I don't trade GU much, I didn't even know GU was in such a strong downtrend in the last couple of days. Let's try Bitcoin. Okay, Bitcoin, yes, I would trade Bitcoin on the 1 minute or so, because it moves fast and it will give me some good pips. So this is the 15. We can then go to the 1 minute, 2 minute, or even 3 minutes to try and see if we can get a reversal. Now, the last couple of 15-minute candles have been consolidating. So if you try to trade it, maybe it would have been a problem. But let's just go and trade. Let's go to the 2-minute time frame to see if we would have gotten an entry using the confluence. Okay. Okay. Alex says my voice keeps breaking. Is that the case with you? Frederick and
No, not with
Cyril.
me. You're clear.
Okay.
No, no.
Okay. So it must be your end, Alex. Try and see if you can sort it out somehow. Okay. So if we try trading my pay packet here, let's just look for the relative low. This was relative low at some point. It was relative low. Was it taken out? Well, just about. To be honest with you, I don't usually go with when it's just about. It has to be very obvious. It has to, because if it takes it out, if it takes up that high, it means there's conviction on the part of buyer to push it up. But if it just touches it and goes, no, I won't take that. So we now look for another relative low, which we find here. Relative low. We want to take out both 1 and 2. This one just about takes it out as well. Okay. It comes down, it oscillates there. This one takes it out. Fine. This is good enough for me. Let's make it bigger again. Okay. So this basically takes out that high. So you can see what's happening here. 1 and 2 were taken out after many candles. That's what we want. Sometimes it's just the very next candle number 3 that does that. But sometimes it's many, that does not matter to us. We just want it to be taken out. Okay. I mean, there are times when you will even see over 10, 15 candles eventually take it out and it still plays out. So let's do this. So it takes it out. We are wanting it to come back down, obviously, because we want to take it out and come back down. So it came back down. After that, taking it out and it begins to come down, we are now then going to be waiting for the crossover to the upside. And we got it here. I mean, we got the crossover there. Now, the price had pushed up before that, so ideally, I won't take this because it's a bit, it's a bit far. I mean, yes, it's just like 3, 4 candles away, but I usually would prefer to be a bit closer if it's going to be before the crossover. So we are basically going to wait until it comes back down, and if it's going to take it out again, we'll wait for the next upward crossover. So it didn't play out well. It didn't play out there. Let's just quickly go back in time. Okay, so we see this one. Like I say, again, one of the ways to know if you should even think of trading a pullback or reversal, make sure that at the point where you are looking at the relative low candle or high, but low in this case, the 20 SMA around there, it's some distance from the 200, coupled with the fact that it has been quite a push. I mean, you don't want a 2-3 candle drop and you want to reverse. Not necessarily, not with this strategy. Let it be quite a push. I mean, the swing happened from there. The move, because you are believing this is going to be the swing low. The swing high, which created this low, started from there. So it's some distance. Okay, fine. So relative low candle to take out number one. Boom. Number one is taken out. It pushes up, and there we have the crossover. This is not a very neat one. Guess what, guys? I prefer if a W happens. When you have the crossover, I prefer if we have a W, hopefully we'll find one soon. When there's going to be a reversal, you would either have a V or a W. This is a V. That's a V. I prefer when it happens like when it gives us a W formation, as in this. It will not be perfect. There are going to be times when, W is like this. So it's like double bottom. Sometimes it's not going to it's not going to drop this far. It won't come this way. It will just, give an imperfect W. So we're going to find an example. So would I have taken this one? No, I would not have taken this one, because when we have the 8 crossing the fast one crossing the slow one, I want it to be that, it's close enough. Fine, you can take the risk, because if you are taking the risk on this one, as in this taking out the doji, you'll be going for 21.42. Well, obviously you got it. You got more than a 1-to-1, but not every trade is to be taken by you. You have to let some trades go, really. I mean, even if you win, just know that, because it could have come against you. Okay, so let's quickly press on and look for another example. Maybe we'll find a W formation this time. Okay, so you see what I mean? This was a V. It came down, it went up, and just, we lost it. So, I mean, 1 and 2 were taken out. It went up. Yes, you would have let it go up because the crossover has not happened. Let it go up and come down. If you want to go up again, then you jump in, but obviously it didn't go up again. Okay, I think this is probably a W-like formation. Okay, maybe even better here. So we can see, we can also obviously put it as part of a continuation. I mean, the trend is coming from the bottom up, it came below the 200. You can use it for trading continuation, but you can also use it for trading reversal. So this is a perfect W formation. Look at this. Look at this formation here. came down, up, down, up. Yes, this bit was lower than this bit. This bit is lower than this bit, but it's a super W formation. Imperfect W's, I mean, I thought on that many years ago. W could be like this. W could be like that. W could be like that. So you can see equal lows. This low is higher than this one. This low is lower than this one, but it's a W. They're all W's nevertheless. They're all W's nevertheless. So looking at this one now, we see it's of relative low at some point. At some point, this was a relative low. So we wanted to take out number one. Yes, number 1 and 2 were taken out by this candle, but it's too small. The next one pressed on, which is super. So after the takeout, we want a pullback. A pullback here, and it began to go back up just where you have the moving average crossover. So we can enter here, which means we're targeting that. It did not give us a one-to-one. That's like 90-24. We gave more than half, but that is not good enough. We want a one-to-one. However, what I always say is the fact that you've just lost a trade doesn't mean you don't give the trade a second chance. The first one lost, but guess what? The second one won beautifully, and it made up for what you lost on the first trade. So fine, we lost this trade because it came down and hit our stop loss. But guess what? Another relative low was formed not quite long after that. This relative low, these are 2-minute candles. This relative low to here, that's like 18 candles. That's 36 minutes. So 36 minutes after less than 1 hour, you got another opportunity. You want this one to be taken out. We took it out. I think we're okay with this, Well, if not, okay, fine. Maybe we're not okay with this takeout. We want it to be, to take it out more powerfully. So we won't count this. Let's not count this. But that 1 and 2 remain. Came down, went up, gave us a red candle. But guess what happened? That's around where the crossover is happening. So even though we didn't get a manner happening here, the manner happened when this candle formed, because this one, obviously, it gave us enough, the takeout, area was good. So it was one, the takeout, pushed up, that's proper takeout, came down, it didn't come back in, but that is fine, because what then happened was we saw the crossover happening just after the takeout. So we would have entered this trade, here, stop loss here, that's like 14-12. That's almost 2-to-1. So when I see the setup, guess what? I don't hesitate, I take it. Even if I lose it, I know it's gonna be it's a 1 or 2 candle stop loss, isn't it? The manner, the MPP, it's a 1 or 2 candle stop loss. Whereas your win would usually give you like 2-to-1. So we see that this one was indeed good one. This was a good trade here. You know, I don't know if we have any questions so far. Obviously, we see the reverse is true as well. We may consider the fact that the price had moved. It's an extended move. After an extended move, expect some kind of pullback. Now, guess what? This one pulled back before going back up. But whether it's a reversal you are trading or a pullback, it will usually be a deep enough pullback as long as the price is far away from the 200 or the 20 is far away from the 200. Any one of them, whether the price or the 20 rather is far from the 200, or both of them are far, expect a pullback. Now let's just do one more here. That's the relative high candle. Now it so happens that candle number one is massive, but let's see if we can get something out of it. Candle number one is massive, which means it's taking out it's going to have to travel far. Okay, so it was taken out here. Many candles took it out, taken out. It went back up like we want. We're now waiting for a bearish crossover, which we got here. A bearish crossover, which we will enter here. Now, the question is, where is going to be your stop loss? Let's quickly draw the SureFire zone. Let's just do this temporarily. Now, the thing is, when it crossed like that, what would have definitely been ideal is to wait for it to go down and pull back for us. You know, usually we say when, you know, we get the moving average crossover, we want the price to go down and then pull back, so we know how far it's going to pull back. You know, because once it's gone down and it pulls back for us, that is usually how far it will go. So we're going to be working with that one, with the pullback candle. If you had entered here, obviously your stop loss would have been somewhere here. This would have gone to hit your stop loss. But it's actually best to wait for it to pull back. It's actually best to wait for it to pull back. And then when you now begin to look for a color flip. There was this green, green, it wasn't taken out, pushed up. This green was taken out, so you'd have then entered here. Sorry, entered here at the close of this. So if you jumped in here at this point, you were taken out, give the trade another chance, you know, and enter again. You see, you would only become more confident doing this if you are bold enough to make sure that the criteria is met. If it fails, despite the criteria being met, and you give the trade a second chance, you will usually win the second chance and recover the loss. That is the part of trading that makes you as a trader, you know, stand out. Let me put it that way. One trader will stand out from the others if they are bold. You know, it's like you are daring enough to enter a second trade. After all, at the end of the day, if it's 1% or 2% you are losing per trade, fine. That's not going to blow your account unless you are getting a series of losses, but once it pushes out like that, let it, let it go down. Another reason why I would have had confidence to enter this trade is because it pushed this far. It pushed this far and it came all the way, for it to, there's no way it would have, there's almost no way it would have gone back there. There's almost no way it would have gone to create a second high. This comes with practice, obviously, but just keep on trading it, guys, until, you learn something new every day. Okay. I don't know if we have any questions. Any questions, you can unmute. Any questions or comments? There are other things I want to quickly show you. Okay. Let me
No, I have no questions, sir.
Okay. So let me quickly share this with you. We looked at some screenshots the other day. Let's look at some screenshots again. Where is it? Where is it? Where is it? Where is it? SureFire. Okay. How do I do this? Let me share this whole thing. Share. Okay. Sorry, can you see my cursor? I know we had this challenge last week. Can you see my cursor?
No, no, sir.
Can you see all the screenshots in the folder?
Yes, I can see your cursor and the screenshot.
Okay, all right. Can you see it now, Cyril?
Yeah, you're on 3.
Yes, I can see it now, sir. Yes.
Okay, yes, I'm on 3. Okay, fine. Right, okay, so let's do this. I've opened it up. Can you see the opened up screenshot?
Yes.
Can you read what it says?
Late color switch after deep move.
Okay, fine, you can see it. Okay. Yeah, we looked at this last week. Just some examples. So, okay, this one I call it a deep drop. Okay, I'm sure there's a. Okay, TP and reverse opposite cross. Okay. So we see here, I mean, obviously there is the 820 cross. You could have traded that, like we were saying a while ago, this is where the cross happened. This is basically too far away. So I would not have taken this one. I would have waited for it to come back. So this color takeout happened after the crossover. That's fine. Could have entered here, stop loss there, boom, obviously gave you the pips. Now that's the 820. But then we have the 8200 cross as well. You could have entered here, because I mean, we see this this wick there. I know it's a green candle, but in a sense, I mean, obviously there are some technical things which, you guys will begin to understand when it comes to price action. I mean, these two could have formed one candle really, with the wick at the top and the wick at the bottom. So that's why I would have entered this trade. Obviously, it gave me more than 1-to-1. So they both hit TP if you are taking both this and that. And then it began to oscillate. It began to oscillate, going up and down. And guess what? It's like it's getting ready to cross to the other side. I mean, with this one, for me to take this trade, I would have had to combine it with mana. Because you find out when you combine mana and the MPP, you have a better chance of winning because, you know, the point at which you then enter the trade itself would usually be lower than the takeout. So if this is the highest one, if that's the highest candle there, you want to take out this one, which means there'll be a line here. There'll be a line here. You can see there's a crossover. You wait for the candle to pull down. It's pulling back up. By the time this candle gets taken out, then obviously we will take it. Okay, so something else I was looking at, you can see I titled it TP, which is take profit and reverse, the opposite cross. Guess what? There was a bullish cross here, an upward cross, which you could have traded. I mean, there was this cross here. Again, because this candle takeout is far, I would wait for it to come back down, and then I would trade the bullish takeout. Enter here, all the way there, stop loss here, boom. Guess what happened? After that, it reversed for us. Well, it reversed. This is a tricky one because you will find the market doing that sometimes, whereby it gives you a buy, and then you're thinking, is this a sell? You have to be careful. I mean, obviously, you can see this would have been if you are taking this trade up, it would have been a counter trend trade because the 200 is above. But if you're going to take a counter trend trade, that's why I say make sure you have the confluence of the mana and the MPP. So that would have given me confidence to take it there. I would have, this is the relative low. Because this is one, this is the one that would have been taken out. If you drew a line here, this is the one that took it out, which so happens to have been my pay packet entry. So this was the candle that completed the mana setup, taking out that 1 and 2. That was also the entry candle. So you can see there are going to be variations. There are going to be some slight differences, some nuances. It's not going to be just happening the way, it's not going to be textbook as it were. It's not going to be textbook. So anyway, if you bought that based on mana, fine, that was good. Could it have been a different, another confluence one? Oh yes. Number 2 taken out, number 1 and 2 being taken out by this one. Because the crossover has not happened, I'm waiting for the crossover to happen. Crossover happened, it pushed down, enter again, you won. So if you are trading gold or some fast moving asset on the 1 minute, some of these things are going to be happening very fast. So you have to be very alert and sharp yourself, very sharp. But if it's happening on the 5 minutes, you have time to digest everything. 15 minutes and above, you have time to digest. But if it's happening on the 1, it could be happening very quick. Okay, so let's quickly go on one. Momentum crossover. Do 1 and 2. To be honest with you, that's basically, to be honest with you, I'm trying to even remember what I had in mind when I did this. But obviously we see this is a bearish crossover, for a sell. Okay, I can't quite, I'll have to, keep this one and come back to it next time. I can't quite remember what I was thinking here. Okay. Okay. This one basically says multiple consideration. There's picture 1. There's picture 1 there. Okay, let's consider multiple considerations here. This is geared towards making you a more robust trader, a trader that is observant. I don't know if you guys can observe some things. Just tell me anything random. Well, not random. Just tell me anything, one thing each that you can see here. Let's quickly unmute. Just tell me anything you can see. I've called it multiple considerations. You guys still there? Unmute.
Yeah. Okay, I could clearly see a crossover. That's the
There are,
yellow crossing.
there are multiple crossovers, both bullish and
Yes.
bearish. Which one? Direct me with my cursor
A little back.
to the left.
Yes, to the left. Yes.
Okay. There's a crossover there.
Yes, that crossover. Yes.
Okay. All right. So one thing, some of the things I can point out, we see there would have been a bullish entry here somewhere, which was good. Collected some good pips. There would have been a sell here, which is also good. And it came and bounced off a rising 200. So going up, obviously that's going with the trend because obviously the 200 is below. Going with the trend, the counter trend trade, you don't want to miss it if the price is far away from this. I mean, obviously the 20 and the 200 are far, but the price is even further away. So counter trend trade giving you super profit as well. And then obviously bullish entry again, giving you a buy. One thing I know, some of the considerations or the things I noticed I'm referring to here, one, you could have been able to go with a trend, take a trend trade, take a counter trend trade. And I don't know if you noticed that when price rejects, I think I've mentioned it, when price rejects off the 20, the 200, well, most of the moving averages anyway, but especially the 200, even more so when it's rising, it's usually powerful. So when price came down here and a strong bullish candle, which took out a lot of candles, I would not even so much, I usually would not even think of any other thing, any other reason why not to enter. I would enter purely based on that. It rejected of the 200 here, rejected all the 200 again. It broke this time, but then boom, powerful candle. I would have just entered straight away here, stop loss at the bottom, and Bob goes. Okay, that's one. That's another one. Two leg. Okay, I don't know if this is a bit too advanced. Maybe it's a bit too advanced. Okay, I'll teach you nevertheless. I'll just quickly, tell you what's going on. A two-leg move. The first leg is A down to B, pull back, then C down to D. We call it the AB. This is popular in trading. We call it the AB equals CD. So this leg, A to B, is equal to, it's usually equal to C to D. Sometimes it will give you a lot more. That is what I call the MPP complete. My pay packet complete. That's the complete move. So go check your chart, do back testing. When you have the MPP, which is obviously we see the 820 or 800 cross, the MPP, and it pulls back with it still being in the trend. You see, if it had pulled back and went above the 200, maybe you think, it's not going to be a two-leg move. But if it came from there all the way down, pull back, once it begins to drop again, giving you a second MPP, you know it's going to be a two-leg, most likely a two-leg move. And what would you do? Bring out your crosshair and measure the distance from here to there, and know that the origin of the C, the origin of the second leg, is going to be all the way down. And guess what? Again, it's going to require boldness. This is what develops as a trader. Once you've backtested something, you have the boldness, the confidence to enter, so that when you see this first leg, the beginning of the origin of it, you measure it, you now see another MPP crossover. Straight away, you should be thinking maybe this is the second leg to give us the MPP complete, the complete MPP. So a push here, the first candle closes, you jump in. I know you might be scared thinking, oh, it's a big stop loss. Don't be scared. If you lose, that might be one of the few times you lose. But losing is what makes you stronger, if you like, so otherwise you would have missed all this. I love playing the two-leg move. Now this is a big two-leg move, but sometimes we also have a smaller two-leg move. We also have a smaller two-leg move sometimes. I mean, even within this, you can see, I'm sure, I wish I could find one, but maybe next time. Okay, I mean, this is it's okay. Let's not call that. Okay, we see another two. This is like a two-leg move as well. Okay, see, there's a two-leg move here as well. It's a small one, but it's a two-leg move. It came from here, the origin came down, up, down. One thing that characterizes a two-leg move is that if it pulls back, I'll go to the chart soon. It would not usually, it would maybe go as far as the golden zone if you're using Fibonacci. It will go as far as we will look at this some other time as well. We will look at all this, some other time. So let's just quickly go back to the chart, and 5 minutes, we are done, guys. 5 minutes and we are done. Where is it? Okay. Okay, so can you see my chart again?
Yes.
Okay. Okay, so we can see another example of a two-leg move. This is BTC. It's a bit busy here, so let's quickly see if we can get let's see if we can get a naked chart. See, there are many layers to trading. There are many layers to trading. That's why it cannot be dealt with in one day. So we can see a two-leg move here. This is the origin of this move down. Call it a zigzag. But not every zigzag is necessarily a two-leg move, but this one is. See, from here to here, from here to here, a pullback and gave us that. Let's see if it's the same kind of distance, but obviously I think it is. From here to here is about 1590. From here to here, see, about 1690, slightly more, a two-leg move. So what I'm saying is, begin to also now look for two-leg moves when you are trading, especially when the price has made a big move. Know that it's probably going to go down. Obviously, if it pulls back, usually if this is not a deep pullback. This one is from here From here to here, it pulled back to the 30, it had a 38% pullback. But I'm usually more confident when it pulls back to at least the 50% or 61% mark, which is what we call the golden zone. So we have measured from here to here, pull back. This could be the beginning of the move. From here to here, pull back, which is obviously 50% or golden zone kind of move. That will give me the confidence to just enter the trade and stay. So from here to here, so you can see it pulled back to the 50%, came down, pulled back to 50% and to the 61%. Now, when it begins to drop again, know that you are going to be getting a two-leg move, or which is AB equals CD. You know, AB equals CD. One of the ways I used to trade it those days is I would have okay, let's just change this. Let's change this to 8. Change the color. Okay, so that's one of the ways I would trade it in those days. When I draw it from the origin to here and it pulls back into the 50, we call it the golden zone. This area between 50 and the 60, that's the golden zone. You know, so if it pulls into the golden zone, by the time it begins to come down and closes below the 8 moving average, I'm jumping in, stop loss slightly above that swing. And target, you know, target the 100%, which is the swing low of this leg A, B, A to B. So when you jump in here, you target here, or you just measure this. And if this is 200 pips, target 200 pips from the origin, not from your entry, but from the origin. Okay, guys, let's leave it here today. I mean, I think we have just one more class, you know, where we will learn some new stuff. This obviously is a strategy on its own, but fine, you know, we throw it in. You know, if you have to watch this video over and over again, do that. Backtesting is what is going to give you the knowledge, guys. You know, like I did a video the other day, I've not posted it for social media. You know, you have not really learned something, or you have not learned deep enough until you've backtested. Some people are hopping from strategy to strategy and they are still losing. Why? Because each new strategy they learn, they do not backtest it enough. Do enough backtesting. Do a sample size of at least 20. You know, what do I mean? I mean, basically go in time path and see, oh, okay, there was a setup here. Would MPP have played out? Okay, played out there. You go back at the second one. Did it play out? It played out there. You go to the third example. Did it play out? It didn't play out. Why didn't it play out? That backtesting, that's what's going to make you confident. Because once I teach you like this, I have been trading it, I'm confident to take it, your confidence would not really grow, because you go there, take the first loss, second loss, you say, ah, this thing doesn't work, you know, because you've not tested it enough. But if you have tested it enough and you realize that it wins like 70% of the time, 80% of the time, guess what? Even if you take a loss, who cares? The next one is probably going to be a winner. That's how the confidence grows. Okay, guys, if there are any comments, quickly unmute. Otherwise, we could call it a day.
Okay. Yes, sir. I have a question,
Okay,
or rather, just a comment.
okay.
I see mostly this two-leg move. Though I've been seeing it, but I'm mostly seeing it doing a clear trend, either a
Okay.
downwards or an upwards trend.
Yes,
So,
absolutely. It's a trend following strategy. because I mean, you don't want to be, if it's consolidating, price is consolidating, you will just end up losing. Because the whole idea is, I mean, swing low, pull back, continuation, impulse, correction, continuation. Now, well, I would not say maybe I shouldn't have taught that today, because I don't want you to now begin to spend too much time on this and less time on the other one, or not give either one enough back testing. But definitely you can do it together, because at the end of the day, your first entry here is going to be because you've taken an MPP entry. It comes back down, pulls back, you take another MPP. So it's like a double MPP in a sense. So fine, it's something you can use together. You can use MPP, you can use this two-leg move, in conjunction with your MPP. After all, it is MPP complete. Yep, great observation. It works better in trending market.
Yes.
It works better in trending markets. Okie dokie. So catch you guys next week. Yeah, I mean, like we always say, or like I always say, once you've trained your eyes to spot something on the chart, you cannot unsee it. Once you've seen it, once you've started to see it, you cannot unsee it. Each time you see it, each time it presents itself on your chart, you will see it. See, this one, for instance, you could say, okay, fine, maybe this was the low, it was the beginning of the trend. Okay, it pushed up. You could say this is leg one. Consolidation as opposed to a pullback, it still works. Leg one, consolidation, leg two. Let's measure it from here to here. It's like 47,000. From here to here, almost 47,000. But the fact is, it came down and went up. It still delivered all of that because it didn't hit stop loss. I mean, if you were taking this, because A equals B or two-leg move, you are picking one move. You are picking one impulse move as the origin. This is the origin. Gave you that pullback, pushed up. The pullback might not always be up to the 50% mark. It might not always get to the golden zone. If the trend is strong, it won't be a deep pullback. It will be a shallow pullback because the trend is strong. So it's there all the time. See this one, so you can see it's just there all the time. Here to there, pullback, leg two. That leg two can then be leg one, there, pullback, leg two, which is way more than leg one. Super, guys. Okay, let's go for today, and we're back again next week for the last class. But is there anything you want me to touch on? Yeah, sorry, go on.
Question.
Yeah, sorry, go on.
Would this course include any live trading video?
Yeah, I mean, like I said, I wanted us to do the 8 classes first. I believe next week is the 8th class. So once we've done the 8th class, we will start the live trading sessions.
Okay.
But the live trading sessions, though, because sorry,
I would want to ask the next question. If you have any, when you do live trading, do you record any videos that we can actually see, or we have to be in the live class? Or if you have previous live classes that you would have recorded that we can actually see you actually doing it?
Okay. So in the past, my live classes used to last up to 2 hours, but then, I wasn't so much trading gold. But now that I trade gold, my live class will last anywhere between 30 minutes to 1 hour, because it's gold, it's the 1 minute I might be trading, and we'll be able to pick up trade quickly. Because if, actually, let me pause this. Let me hold on, so this is not too long.